Hey there. Do you ever wonder how the rich seemingly get richer year after year while you're still struggling? Or do you wonder, what are you going to leave behind for your kids? What kind of legacy will you leave for your heirs? What about you'd like to know more about financial freedom through passive and residual income? If any of these are topics you'd like to know more about, but you don't know where to start, let's get connected. I have a 10-part strategy to grow, protect, and transfer wealth that I call Pitranomics. I'm Juli Pitra. Join me in my Facebook group, and let's grow together. See you soon. Hi, everybody. I'm Juli Pitra, and for those of you joining, I'm so pleased you're here. Today, we're going to have a fun topic that's specifically for investors, and it's about insurance. So what do most of us really know about insurance? There's something ringing. I don't know what it is. But for many of us, the real education begins in the midst of a casualty, when we find out that our insurance isn't sufficient or that we've not maintained our properties in the most optimal way. Now, for real estate investors, this can be doubly devastating, as most of the properties are revenue producing, as well as these buckets of liability that people live in. Let's take advantage of our wonderful panel today to get some questions about this crucial topic answered and learn how to be more strategic with our insurance choices. So we have three wonderful people. Okay, why don't I see them? I want to see everybody. Wait, let's go here. And have to add Kim back. I want all of us to be together. There we go. Okay. So hi, everybody. I don't know what happened there. Sorry. On the top right, as far as what I can see, we have Michelle Hambrick. She's the owner of the Michelle Hambrick Agency based in Little Elm, Texas. She devotes her time to educating and advising small business owners, as well as individual property owners, on the benefits of having a properly executed asset protection plan as it relates to insurance. By the way, let's take this opportunity to congratulate Michelle on her recent election to Little Elm City Council in March this year, 2023. And next, we have in our lower right, Tracy Durfelt. Now, did I pronounce that correctly?
Yes, you did.
Thank you. He's the founder of Construction Insurance Risk Education. That acronym is CIRE. He helps construction owners and CFOs decrease their cost of insurance while still maximizing protection, avoiding uncovered claims, and increasing profitability. And last but not least, over there is Kim Stallings. She is the owner of Heritage Risk Advisors based in Richardson, Texas. You can rely upon her to protect all of your most valuable treasures, including businesses, families, home, auto, and finances. And by the way, let's congratulate Kim on her newest little addition to her family, a cute little baby. Maybe she'll show him in a minute. And I'm just so excited y'all are here. Thank you for coming. So I'm going to start this with asking a few questions. And there's one that I did not think to mention beforehand, but it just occurred to me in a conversation I had with somebody else. Kim looks like she's going to be popping in and out. So my first question for you guys is, how important is maintaining your credit in obtaining insurance?
It's crucial.
How important and why? Maybe why, stuff like that.
Do you just want us to jump in, or?
Let's see. I'll start with you, Michelle, since you spoke first, and then I'll just keep going.
You know, your credit impacts almost everything. And so when you have property owners that have higher credit scores, their rates tend to be a little better, at least my experience in doing this.
Okay, Kim and Tracy, you guys want to hop in on that?
Yeah, I mean, I think it depends. Can you hear me okay? I think I'm having internet bandwidth issues.
That's
Is
okay.
it coming across?
By the way, love your background. It's pretty.
Thank you. It's my yard. I think it depends what kind of company you're writing your policy with. Not all carriers check your insurance. When they're checking your insurance score, they're not necessarily checking your credit score. A lot of commercial carriers and E&S carriers, which investors might be using depending on how the policies are set up, aren't asking for socials, and they're not running even soft pull credit reports. So I think it really depends on how you're structuring your asset protection on that particular deal.
Okay. Tracy, your opinion?
Well, it depends on what line of coverage. I would imagine that if you're looking for life insurance to cover a loan, that moral hazard is going to be an issue, and they're going to look at your credit. On the other hand, if you're looking at basic fire insurance, unless it's a very large risk, we generally don't check.
Okay. So there you go. Doesn't hurt to have great credit. Keep it up for a variety of reasons. And let's move on to my next question. By the way, everybody will have the opportunity to either offer a question, you can type it in the chat, or if you're in the background, you can request to come forward and post your question. We're going to be very flexible here. So what types of insurance is most commonly needed by the real estate investor? And does it matter which particular type of investor they are? Just speak to that, please. Tracy, I'll start with you this time.
That is not going to be a short answer. Sorry in advance. When you have an investor who's also doing the work, that's one situation. When you have an investor, an owner of the project who is hiring out to a general contractor to do the work, that's a different situation. In each case, if you intend to resell the property, you have a 10-year statute of repose if it's new construction, and sometimes can apply in the event you have additional structures being added to the property as opposed to just separate new structures. So bottom line, you're looking at liability insurance being one of the centerpieces of protecting your assets, and then of course property insurance for the project while it's under construction or renovation, in addition to property insurance once it's completed. There are other aspects that you have to look for, because sometimes people pick the wrong spot, and that's not a construction liability issue, that's a professional liability issue or an environmental liability issue, just as an example. So a very important thing is to make sure that you're working with an insurance professional who understands the difference in business models of the real estate investor. And then more importantly, is to make sure that whoever is doing the work has good paperwork. So if you are the real estate investor and the GC, make darn sure you're getting full policies on all your subs who are doing the work that you're subcontracting out. Make sure that you have insurance protection for the person who's at fault, not just yourself. And then if you're a GC or you're going to hire a GC, make sure the GC is meeting that standard. And that, when you look at that devilish question of how much insurance is enough, the bank will usually tell you what they need, but then you're going to work with your insurance professional to discuss what's enough. And that may be about your net worth as opposed to the project itself. Structuring with an attorney is important too.
Okay, so that was a lot there. There was, how are you handling that property? Are you buying it and doing the renovations yourself? And then, what was the other point that I just loved? If you're doing the renovations yourself, or if you're not doing the renovations yourself, make sure that basically everyone that steps foot on your property is not going to cause some kind of issue for you going forward. And keep in mind that you're not just protecting that asset, you're protecting your other assets from that asset. So
that's right.
You have to be extremely strategic. Thank you so much for saying that. Kim, what are your thoughts on that?
I wanted to say, and there's a lot to talk about this, and I'm sure Michelle's going to add a lot too, but a lot of times your lenders, and when I say a lot of times, I'm going to throw out a number like 97% of the time, they're only really concerned about hazard property insurance, and they're not concerned about the general liability piece. In fact, most times they don't even have requirements for the general liability piece. They only have requirements for the property. And I think that's really short-sighted on a lot of lenders, especially if you're using private money, or if you're as an investor and you're using one of these hard money individuals that isn't like a normal formal bank. Normal formal banks want minimum general liability requirements. But if you're outside of that scope of like your Chases and your Bank of Americas and your standard kind of lenders, they often don't have requirements for general liability. And that's a real problem because that can take down your asset just as quickly as a tornado or a hailstorm or a fire. So.
Right. No, I appreciate that. And the other thing that Tracy mentioned that maybe you can touch on, Michelle, is part of your protection plan should include an attorney, because they can help you kind of identify, well, where are your, I won't say weaknesses, but where are your vulnerabilities? So what's your thought on that?
Well, I agree with everything that both Tracy and Kim have said. And if you don't have an attorney that you normally work with, it would be a great recommendation to get one, because sometimes from a legal aspect, they can see pitfalls that maybe those of us who are in insurance haven't even thought about. One of the things that Tracy said that I wanted to hit on real quick was, the need of making sure that your subs, if you're using them, have your own insurance, because, when you sign that insurance application, you are telling that carrier that you are going to fully adhere to all of the requirements, and especially with excess lines, they want to make those subs have insurance. And if you're signing it, saying doing that, and then something happens, well, guess what? Whatever has happened may not be covered.
May not be covered. Let me ask you this. What's, in your opinion, all of you, an effective way to ask your contractors, subcontractors, whoever, if they have insurance? Can they share a copy? And how do you confirm that their insurance is in fact valid? Because what I run into is sometimes subs that will hand a piece of paper. There's no insurance back there.
You can call.
Okay.
May I take this one a little bit? This is actually one of the centerpieces of what I teach and what I do. I invented a service 15 years ago called trades tracking because no one does it right. And you have to get full policy copies. You have to have pretty stringent requirements. And the best way to capture that is saying, hey, you got to sign a subcontract. Without a signed subcontract, their policy won't act on behalf of the GC. There's a contractual liability exclusion in all of the policies of the subs unless there's a written subcontract. So why not outline all of those requirements in the subcontract? And then if they sign the subcontract, send a follow-up memo per the subcontract. Please provide policies demonstrating the coverage you subscribe to.
And I'll piggyback on there as an investor and as like an insurance professional. As investors, we're just trying to get the job done. We're trying to get it done quick. We're trying to get it done with little headache and little money. Okay. And that's cute until you have a really big problem. And so if you're working with a subcontractor and they don't want to sign a contract with you as your subcontractor, where they're going to talk to your attorney, but hold you harmless, indemnify you, very important language, and provide insurance documentation where they name you as an AI on their policy and give you the copy of it so that you can make a phone call if you want to, or at a bare minimum, if a lawsuit happens, you can go to the judge and say, look, here's my work order for the terms of the contract. Here's the contract they entered into with me holding me harmless, indemnifying me. Here's my insurance policy copy from them with me named as an AI. This is not my problem. You can maybe get yourself dismissed from said lawsuit, but you got to have all those pieces. And if your subcontractor doesn't want to enter into a contract with you where they have to provide all that, might be one of the red flags you're looking for to not have a problem in your investment.
I agree.
So I believe in theory, all of that. Okay, I really do. But excuse me, what I run into is a lot of times you're hiring a guy because trades aren't known. The actual tradesmen themselves aren't known for their business practices, acumen with paperwork and such like that. So they come with truck and tools. Is there a way that you can on your own provide some liability coverage for, your guys, the guy with the truck and tools? Is there something that you recommend?
There's two different ways to do that. One, you acknowledge them as an uninsured sub on the policy that you buy. You'll be charged additional premium for that, and there'll be some coverage limitation. The better way is to execute a policy that's project specific just for that sub. So you're not covering all of the sub's activities with that policy, but you're limiting the coverage that you as the GC or the investor are providing for just that particular project for that sub. And those are normally minimum premium type of policies. And those aren't cheap all the time, depending on the kind of work being done. Minimum premium for a roofer, for example, being much different than it is for a guy who builds mailboxes. But some number in between might be satisfactory, and you'll know the true cost of hiring that man in a truck as opposed to the professional who has generally good insurance all over.
Okay.
And I'll add to that, I do have some clients that work with not very business savvy contractors and subcontractors, and that's totally fine. But insurance for most trades in Texas, and I'm just speaking to Texas, has become so inexpensive for just your average person that's not doing a whole lot of work, even handyman stuff. There are so many different insurance carriers that are writing policies that are maybe $300 to $800 a year to give them coverage as a subcontractor or as a GC. Now that doesn't have all the play pretties in it you want, but it does give you some coverage. Those policies are very inexpensive. And I'm not saying this is the best business practice, but I have some clients, they pay for those policies for their subcontractors because they use them so often. And the policy is in the subcontractor's name, and they're the ones that hold the paper, and they have to report everything to it. But my clients actually pay for it because it's worth it to them.
Yeah.
So that's an idea.
Okay. Michelle, you were going to say something?
No, I was going to say, I've had that happen. I've had that happen as well. And then you know that you have what you need in place. It kind of lessens the anxiety for everybody involved.
Okay, let's talk about, and this is where some people trip up, the cost of insurance. They'll comparison shop and just go with the cheapest one. Know lots of people that do that. Or they bulk at the cost of insurance. I have to just give a little backstory. The way I met Kim is that I was trying to work with an insurance agent on a deal who was mucking it up. And the lender that I was working with at the time said, hey, call Kim. She can get this done. And we met and talked on the phone and shared laughter and frustration. But truth be told, there are certain types of deals that insurance agent has to be familiar with that type of deal. It's not a one size fit all. Would I be wrong in saying if you're buying a house that you're going to renovate, you're going to be buying a different kind of policy than if you're buying a house that's ready and someone can move right in? Look at my disappearing hands, fascinating. Or if you're buying a property, I don't know, there are some differences that I think you guys could speak to, but there's liability, there's when it's vacant, there's when it's tenanted, there's protecting your income stream, there's all kinds of things. Can you just speak to the different types of insurance that an investor might have to purchase and then maybe prepare them for the sticker shock of such different policies? Just speak to that.
Can I address the first question about cost or perception of cost?
Let's talk about that because that's a big thing for me.
Yeah. And we run it. I work with any number of agents, including Kim across Texas, who are saying, this is a little more expensive than what the other guy is offering. I said, well, get us a forms list. Get us a complete copy of the sample copy of the policy being quoted so we can understand the differences between what we're quoting and what you're getting quoted through somebody else. That having a coverage comparison, I think, is really the key, because not only does it give you information, but it demonstrates the expertise of the agent involved, because many times the other agent can't do a full coverage comparison the way they should, because they don't specialize in construction or in the business model at hand for an investor.
Mm-hmm.
I agree with that.
I've got some stuff to add there, and I'll try to make it quick. I've given entire lectures just on the pricing of insurance to the end user. You know, number one, every carrier looks at what they call COPE, construction, occupancy, protection, and exposure, and that's how they figure out what cent rate they're going to charge for a place. And so that's what's the thing made out of, how is it occupied, is it vacant, is it under rehab, does it have a tenant in it, is it a homeowners versus a landlord? That's the occupation part. How occupied is it? You know, if it's a multiplex, is it 60% occupied or 25% occupied? The protection, like what zone is it in? You know, they look at fire score ratings and police response ratings in different areas. And the exposure, is it next to the ocean? Is it next to a wildfire zone? Is it a floodplain? Is it next to a gas, you know, plant? So they look at all those things and they calculate, a lot of that information comes from the zip code, the full 9-digit of the zip code. And they figure out what your cent rate is. And then it's just math to figure out what coverages you're buying times the cent rate and the value of the property. And so a lot of my customers get upset when they're like, well, I just did a flip and I only paid this much for the house. And you just did one for me 2 months ago and the insurance wasn't that expensive. Well, we're in a different place. The cost of materials maybe has gone up. So your exposure is different. Your zip code is different. And the type of coverage that you're asking for is different on this deal. So it doesn't matter what you paid for it. The thing that you're asking them to replace if it burns down is fundamentally different than your last deal. And that's, I think, really hard for people to try to understand.
Yeah.
Okay. No. Do you agree, Michelle?
I do agree. And it you know, it really also depends on, and I think Kim hit on this, what you're going to be doing with that property. You know, are there going to be any foundation work that has to be done? Are we going to have to do anything with taking down walls and putting other walls? And all of that comes into play when they're trying to figure out what your rate is going to be. But I think the thing for me is when people balk at what it costs and you're looking at your entire portfolio, you know, how much is this going to hurt you if you don't have what you need in place? And that's kind of what I look at. And it's like, how much risk do you want to expose yourself to? Because as your agent, my job is supposed to be to help you mitigate that risk and to put into place what you need so that you're not left only holding your hands.
Okay. Nope, I get that. I understand. Let me ask you this. There was one time, I think I actually asked Kim this because the first time I got insurance with her, she sent me, what was it, a 65,000 page questionnaire that I needed to answer. And I was like,
Probably just one, but yeah.
no, it was long. And I was like, why does it matter? Because this was years ago. Let me tell you, the education that you get as an investor in insurance, hopefully it's constantly increasing. So for me, I was like, well, are you doing this? Are you doing that? Does it have that? Does it have at that point knob and tube? I was like, what is knob and tube? So why is that more? What's my question? Let's go back up. There are a lot of people that don't understand how all those questions impact and often lie on the questionnaire. I'm just going to say I know that. They lie about the questionnaire. Let's just speak on that. I won't try to direct that. Speak on the questionnaire, the questions that are asked, why they're asked, how it impacts risk, and all that, please, if I've made myself clear.
I think so. And I can tell you it's as much about premium as it is about coverage. The number one lie we see on the questionnaires, and we see hundreds every year, is anything to do with the cost of work being performed to something that is the rating basis of the insurance. Most times we see this as relatively understated, and they think, okay, I can get my insurance for cheaper if I tell them I'm only doing half the work that's supposed to be there. And then you end up with a big bill at the end called an audit, and you wonder what happened. And you talk about uninsured subs that were discovered because you didn't keep your paperwork, as we previously discussed, and now all of a sudden you're dealing with a very large bill. because you decided to tell people you work with insured subs when you don't. Those are the top two fibs that we see. The other ones can be material, especially if it says, hey, if you had any claims in the last 5 years, and you say no, when in fact you maybe have. That can be a material misrepresentation at the time of claim that will provide for a denial of coverage. So those are the top three dishonesties we see all the time, and those are the top three consequences.
Tracy, is it your common practice to ask for the scope of work when you're working with contractors who are doing fix and flips, or?
Oh, absolutely. It's inherent in the supplemental, and that can be a good line of questioning. For example, when it comes to providing builder's risk coverage, whether there's structural work done or not, sometimes we see some honesty issues there.
Yeah.
And I get where you're going. Also, when it comes to how close is the fire hydrant, or what is the fire protection class? Yeah, you can see some fun there. And we tend to intercept it because with Google Satellite, we can see a lot of things. Or we dig deeper and ask for an engineer's report or other public records that we can access to understand the scope. That's a good line of questioning.
Well, I remember there was a house I did that I paid $10,000 for the house, and it was worth probably $6,000 because it had whole things falling down. The scope of work on that project was intense. It had a whole section falling down. It needed extensive foundation work, extensive exterior framing, roof reconfiguration. I turned it from a 2-1 into a 3-1.5. I added a new panel because I was putting in a washer, dryer, refrigerator, microwave, a lot of things that weren't in it. And I ran into a problem where the first inspector that came out recommended that they deny coverage. And I was like, why? And he was like, well, I don't know what he said, but what I remember is he thought the house should just be taken down. Mm-hmm. And I was just a wee bit upset with him. It's just a smidgen. Mm-hmm. And I quite politely and calmly said that he was incorrect, that it was a salvageable house, that here's the kind of work that I've done, and I can more than take care of that. And yes, it looks like a whole quarter of the house is falling down. And yes, there may be knob and tube, and I don't know how old this house is because there are no records, but I was able to get that house renovated, and it has a nice tenant, and so it's fine. And it was the one time where whoever that guy was, he reached back later and he was like, well, I've seen pictures of this finished house, and I wouldn't believe that was possible. My frustration is, why doesn't the experience of the person doing the work factor into this sort of issue? Why would he just deny me out of hand? Like I said,
okay. This was an inspector who was sent after the account was bound, and a loss control inspector, basically saying, I'm asking you a question, Julie, is it somebody that came after saying we ought to terminate coverage because this is not what we signed up for, or was it something that involved a claim?
No, it did involve a claim, yes. Mm-hmm.
It was the first one. Okay. So loss control people, you and your audience might get a laugh out of this, but there is a pecking order of expertise in the insurance industry. Okay. And I would say this in front of each of them if I had the chance. So generally you have actuaries who don't know anything up close, but know things that they look behind at. And they're pretty skilled people. They're pretty heady. You can make fun of them for their brains, but they do what they do. Then you have underwriters who, if they're specialists, have actually some experience with that industry, if they're any good, or if they've been given a specialized empowerment. And then you have marketers who generally are marketing beyond just one line of business. Now there can be exceptions. There are marketing agents that specialize in construction or construction related fields. But then you have people in claims after that who actually have to see what happens and how coverage interacts with the reality of what was sold. And then you have loss control people who we can't measure their success, because if they're successful, nothing happens, right? And then the last rung on that ladder going downward is audit, because all they have to do is count the beans and figure out if you exceeded your allowance. So when you look at loss control being second from the bottom of expertise, I don't expect a whole bunch, okay? Because if they were any better, they'd either be selling the insurance or underwriting it.
Wow. Okay. All right then.
So,
Michelle. So these people who should be knowledgeable and the best ones, they aren't those people that are coming behind.
yeah, go to your agent who has a relationship with the underwriter, and explain your experience and or your circumstances that may be beyond the loss control person's understanding, and get the negative decision reconsidered, is my point.
Okay.
But
Michelle?
there's also the piece of, that's why I asked so many questions. So when you said, Jesus, Kim, you asked me 65,000 questions. If your insurance agent is not asking you a lot of questions, something's going to go wrong, because there's a reason all those questions are being asked. Because some carriers don't want to write a property that has foundation damage. They don't want to be on. Some carriers don't want to write a property that's having old wire done in it, or that existing has knob and tube that you're not planning to replace. It's not part of their appetite. I think a problem in our industry from a retail agency standpoint, where Michelle and I play, is that customers are so used to just calling their insurance professional and saying, hey, here's the address. I'm going to put a tenant in this property. And they go, cool. And then the agent just writes them a landlord policy and they go on about their business. But they didn't stop to say, do you already have a tenant about to move in? When are they moving in? Are you doing any work before they move in? Oh, you are? Cool. What kind of work are you doing? How long is that work going to take? You can't have a landlord policy then. You have to have a vacant dwelling with renovation or construction policy. What work are you doing? How long is it going to take? Who's doing the work? Okay, these carriers are not an option for you. Only these carriers are. And then they can still have an opportunity to not want to be on the risk. And so all those questions get down to making sure you've got the right policy for whatever risk you're jumping into at that time, and that everything you're doing on the risk is actually being contemplated for coverage. That's why there should be so many questions. But a lot of people in our industry don't do that. They say, oh, you're an investor. Oh, you're doing a landlord deal. Just shoot me the address. And they look it up and they don't check with you to verify. They trust the internet. They trust Google. That shit's wrong 90% of the time. There's just an idiot, even at the appraisal district. There's just an idiot making less than minimum wage, hating their job, probably hungover, keying in the incorrect information that you're using without questioning it. And then the inspector, the loss control person, comes out and they're like, wait, this house isn't made of brick. Wait, this house is 3 stories. Wait, this isn't what we wrote. And that's because nobody's doing the work on the front end to ask the questions that are necessary to make sure we're all playing the same ball game. And I think that gets frustrating with people, but it doesn't frustrate investors until they wind up with a money hiccup.
Yes.
And when they wind up with a money hiccup, then I hate insurance. Insurance is a 4-letter word, but it's not. You've just been dealing with people that don't want to play the game right.
Yeah. The more questions asked up front, the better off we're all going to be. And it doesn't happen overnight. I mean, some of these things you have to really work with to get them right.
So, Julie, I've got one thought to add. If I can put our audience through an exercise that explains it all, keeps it real simple. When I teach insurance, I typically feel that there's a sweet spot, but there's no perfect spot. And so I tell people, let's draw a triangle, an equilateral triangle where all sides are the same length. And then at the top, you're going to put price on one corner of that triangle. On the other bottom left corner, you're going to put coverage. And then on the right bottom corner, you're going to put the word convenience. Okay. Now, you get to pick a spot anywhere in the middle or at the either end of that triangle, but you have to stay inside the triangle. And that's what you get for your value. So as you pick a spot toward price, you're going to have a little less convenience and a little less coverage. Okay. If you're applying for insurance on a napkin, you're probably going to have a lot less coverage and a higher price. You see how this works? And then, of course, if you're willing to go through the inconvenience and at the same time pay a little more, you're going to get great coverage. So that's insurance in a nutshell. If you get all three for whatever reason in one given year, that insurance company will be out of business in 3 years and not around to pay the claim.
Yeah. And you kind of want insurance companies to be around to pay the claim. So, you know what? Believe it or not, I don't know if you three will believe me, but there are investors that intend to do major rehab and work and then just get a landlord policy. I don't know if you've heard of such a thing.
Well, there's
denied. I do.
There's recently a Dallas-based insurance company that was originally A- rated went out of business this year, called Hallmark Insurance.
They did?
And now yes, it did, and everybody's scrambling to replace those policies because they gave away things unbelievably on a napkin. I always wondered, okay, I have a roofer paying $50,000 premium, and Hallmark would walk in at $29,000 with better coverage and a one-page application. And they did it. They did it for roughly 5 years, and now here they are, out of business
and out of money.
And yeah, that means they're out of money. That's right, Michelle.
So
that doesn't.
That's scary. What if you think you have a policy and then you no longer have an insurance company?
Right.
Here's the things nobody reads, because you think you're dealing with a retail agent and then an MGA, but Hallmark is the paper on the back end that you don't even know you bought until you actually get your policy, which might be 90 days later, and you never read it because it's 187 pages. And so you're like, oh, Hallmark went out of business. I don't have any insurance with Hallmark, but you don't know if you have insurance with Hallmark or not because you haven't read your policy.
Yeah.
Okay.
Yeah. That's just a point to bring up that given the statute of repose and generally the issues of warranty that provoke liability lawsuits is 10 years in Texas, you have to pay attention to the financial rating of the insurer involved. And when you look at the underwriting process, if they're underwriting on a napkin, that answers your question right there.
Tracy, I think if you could, Julie, you don't have this question, but maybe it should be asked. Tracy has glossed over this thing called the statute of repose twice in this conversation. But I think if you could give Tracy a minute or two to explain what that means, especially to our paper GCs that are holding themselves out as being contractors on jobs that are actually never swinging hammers, and what the implication is on these properties in this lifetime, this lifespan of this statute of repose. I think that'd be useful to your audience.
Okay. Tracy, would you mind telling us a little bit more about the statute of repose, please?
Well, when it comes to dealing with a consumer, which we are, generally you're dealing with parties that are being protected through statute by a Consumer Protection Act in various different states, including Texas. And this one, it's 10 years. And what that means is that during the 10 years, unless there's a contract otherwise modifying it but not negating it, the person who sells a property, the GC that performed the work, is going to be on the hook for potential liabilities in terms of construction defect or breach of contract for up to 10 years. Many people use warranties with exclusive remedy clauses to modify that open-ended blank check statute that Texas has, and that can be useful in limiting your liabilities in addition to using liability insurance to provide for conflict resolution on those items not contemplated by the warranty.
Okay,
The
I don't
trade
know if everybody else feels the same way I do. That was a lot that I still don't understand. So I'm
Okay. Well, if I've been given more time, I can do that. But I'll give you a couple examples because that helps. And so when you're a general contractor investor and you're maybe not going to rent the unit, but you're going to turn around and flip an apartment building, or let's say a single family home, you're incurring liability, beyond what your purchase and sale agreement is going to say by way of statute. Okay. Purchase and sale agreement will tell you what's represented, et cetera, et cetera, et cetera. You all know what that is. But bottom line, if the person who ends up buying the goods isn't happy because it was grossly misrepresented and otherwise unresolved, you can incur a liability under the statute of repose. Okay. Now, when you offer a warranty, a promise to fix things within a limited set of boundaries, okay, and the warranty usually in Texas that's effective is one that also goes out to 10 years, then you can say, listen, during the first year, I'm going to fix whatever's wrong because even if it's a misunderstanding, I'm going to fix it. The second year, I may only pay attention to appliances, HVAC system, plumbing system, electrical system. And then from there forward, I'm going to pay attention to structurally related issues, and I'm going to define those accordingly. Now you don't have a blank check for those 10 years. You've actually structured your obligation during the 10 years after you sold something. Okay. And if you don't do that, again, the statute in Texas of repose says that person who bought that single family home or bought that apartment building can come back at you and say, I disagree with what you sold me. I'm going to take you someplace you don't want to go, court, and you get to use your liability insurance. Then the liability insurance, it can resolve things. The one other thing I wanted to bring up is if you have a claim on your record, now you're one of the special 5%ers that I see across my desk. Only 1 in 20 files has a claim. You get special pricing. So you really want to use tools to avoid these kinds of situations where you have to use your liability insurance. It should be the option of last resort, but a very effective one. At the same time, risk management using warranties or checking your trades for full insurance policies. Those tools can prevent your use of that liability policy, but give you protection.
Is that why builders have these contracts that are like this thick?
Oh yeah.
Yeah, they do.
That's what I was gonna say. People that are listening that are like, oh, I'm just a me and I'm just flipping a house. That doesn't apply to me. That's for people building tract homes and stuff like that.
Oh, no.
It does apply to you, but you think it doesn't because people that get warranties for their new construction houses get them from big fancy builders. But it actually applies to anybody holding themselves out as a general contractor, which is not just hammer swinging contractors. It's people that are paper GCing these deals as well. And you don't even realize that you're being held to the same standard at this repose thing for a decade in the state of Texas because you don't think you're in the same playing field. But the state doesn't look at you as a tiny player or a big player. You're just a player and you're supposed to play by the rules. And so that affects anybody who's GCing their own deal in a flip house. And it doesn't have to be an apartment complex. It can just be your neighbor's house you're flipping and selling. And then you're on it for 10 years if some cabinets fall off and smash some little kid in the face when they're getting cereal.
That's a live claim, by the way.
I know.
Yeah.
I know.
It fell off and oh wow. Okay.
Yeah, and that can be a remodel or it can be new construction. You're still on the hook for that kind of god awful claim. The other thing I'd add is for the audience, it's not about protecting the one project, it's about protecting you. So what are you worth?
Exactly. No, I completely agree. And if you're, say, a successful investor, you've done it a series of times where you've accumulated some stuff that you don't want wiped away by one particular project. And I have a a good friend, I don't know what happened, top-notch investor, doesn't miss much, but somehow missed not having an insurance policy on a flip, and the house burned down.
Oh no.
Mm-hmm.
So luckily no one was hurt. And, this person kept beating themselves up. And I was like, hey, you do so many, this one miss, I can, don't beat yourself up. And it was like, but what a miss. And I'm like, yeah, I know it's painful, but whew, you do so many. So it's important to stay on top of that. One thing I haven't thought of, I have a lot of insurance policies. You guys have some, I guess, advice on how to maintain, organize, keep up with, make sure stuff is renewed so you're not reacting, but being proactive about correctly maintaining your insurance policies and paperwork. Any hints or help there, guys?
Use a calendar. If you have like a Google Calendar or any other type of calendar device, input it in like you would any other appointment with a 30-day task warning. As far as the effective dates of the policies, we do that all the time with trades tracking at a grand scale. You have to use technology to keep on top of it, and then make sure you have a digital archive. The paper's never there, especially if it's in the building that burned. So you kind of want to make sure that everything's in the cloud somewhere. And then the one other coverage we haven't talked about, which is becoming very relevant now that I'm talking about digital, is cyber type of coverage. And if you don't mind, I'd love to hear what Michelle and Kim have to say first about their interactions with cyber and how they work with it. And then I'd like to follow up.
Okay. Michelle, would you like to speak to cyber coverage first?
That's one of those coverage areas that is becoming more and more relevant. A lot of people think that they need it because they feel like they don't have anything that anybody else wants. But, our criminals are getting more and more savvy every day. And the information that we house in these little handheld computers, the wrong person gets in there and it could be devastating to you as a business owner with the information that you have in there. I mean, addresses, phone numbers, social security numbers. I mean, you have it. And so even if you think you don't need it, I don't do a lot of cyber, but even if you think you don't need it, I think it's worth a conversation with your agent to see what information you have exposed that somebody could get a hold of. And even with your website, if your website goes down and you're one of those people who relies on it to run your business, what are you going to do? How are you going to overcome that?
Okay.
There's that. And, Julie, you shouldn't have 200 different insurance policies. You should have package policies where you have one that has like 20 or 30 properties on it, and then another one with 20 or 30 properties on it, so that you only have one birth date 2 or 3 times a year instead of 200 birth dates that you have to keep up with. So step one, it might be worth your time and convenience in the triangle to have package policies instead of individual policies. That's one step. But as far as the cyber question, if you're a GC, you're doing your own projects, even if you don't think you are. If you have an LLC, you can have a business owner's policy. You can write a cheap business owner's policy with Hartford or Travelers Commercial or something like that, or any of these other online ones, really quick, where you spend, $500, $900, $1,200, depending on your gross sales, a year, and you can get cyber added to that. All right. The other issue with cyber is that, whatever, no one's going to take in a lawsuit against you, a tenant against you or anybody else that, oh, I lost my paperwork. Oh, my dog ate my homework. So cyber for those lawsuits, because you're still going to get strung up and sued for not having what you need. And so is your insurance agent. A lot of insurance agencies buy E&O, but they don't buy cyber. And sometimes cyber is excluded from like your insurance agent's E&O. And then what if their system goes down and they don't have copies of stuff for you and they haven't added your policies in or billed you. So the cyber thing extends beyond my personal social security card and my personal bank account information. It goes, when you read the paperwork for the cyber policies, it covers so much more of those interactions. So it's relatively inexpensive. And it's one of the only things that's going to save your assets in an issue like that.
Save your assets. Okay.
Assets.
So one of the things that I talk about, and it's coming about these days, is we're all into renovating homes or flipping homes and providing maybe a Nest or an energy efficient thermostat, for example, right? It's a smart device, and there are interesting liabilities incurred when you have a smart device, but they aren't covered by a cyber policy. Cyber policies cover the data or the breach of data of the insured that's named, of the investor or the builder. Well, get a load of this. This is the number one claim that I have in my book of business because I was dumb enough to cover it. It's smart home liability. And the number one claim involves thermostats. Thermostats that are activating your heat or your air conditioning when somebody's home and otherwise turning it off when people aren't. Okay. They do that with a motion detector. And the hacker will come in, and they're not holding the house hostage, saying they're going to overheat the house or chill somebody out. They're taking the data from that motion detector and start selling it on the dark web. And so people have a pattern by which they occupy the house. So people come back to the home or the apartment and nothing's there. Everything's been taken. And it tracks right back to the device that was installed. So, I mean, this has gotten pretty scary. It's not just about your data as the investor or VC. It's about the data of your customers because you install the device. Okay. So cyber needs to be something your agent learns about, talks about, and you need to explore. There's a lot of information available both on YouTube, if that's how you learn, or just on flat PDF out there. But it is the 21st century construction defect. It is the creepy thing that will happen that you don't expect.
Now that you've frightened us all to death.
Yeah, well, I mean, a lawyer will do that too with a construction defect lawsuit, and those are more common, but it's just the imagination runs wild with an automated house. So,
wow, that is pretty scary. I haven't thought about that. So what happens is that someone can access the data from why that thermostat is working and be able to,
or your refrigerator, or any device that's connected
or not.
Yeah. The worst thing is, and this is the number one vulnerability, is that most people don't protect the smartphone itself enough. And the smartphone has access to all those devices.
Yep.
So when you're walking around Las Vegas and you don't have a properly protected cell phone, it can be cloned as soon as somebody brushes by you. And now they have access to all your devices and their data.
How do you properly protect the cell phone?
Well, I wish I could show you my phone right now. They have RFI covers. I also use them for my wallet because I've had my credit cards cloned before. Anytime you're in Vegas or in Miami, you're going to be targeted by people that just walk by with essentially a cloner. It's a wand that will come by and it will take all the data right off your phone. And it's strange. People are saying, well, how can it do that if I have a password on my phone? Well, they just clone the phone. They figure out the password later using a sophisticated program. So,
Tracy, if you happen to have the link to that, what you call RF cover?
You can go to Amazon, RFI protected. Yeah, RFI. Yeah. Amazon RFI protection. It will do it for wallets, cell phones. Shoot, they might have RFI protection for your underwear. Who knows?
I have one.
I hope they're not cloning what's. Okay.
So anyway,
these things. Nope.
Back to insurance.
There's actually a purse too. You can have that'll be a new thing. Okay. So I will, guys, I will be looking into that, getting that kind of protection because my phone is usually with me everywhere I go.
Yeah. No,
So,
again, risk management isn't about expecting insurance to pay everything, but expecting it to pay as a last resort. So how do you make insurance a last resort? By getting the paperwork and the subcontracts that you need, by making sure that you've properly filled out an application so that the coverage is effective, making sure that you have different protections in place. For example, if you're in a high crime area, you might want to fence off or put different types of web-based movie cameras up on the property while you're renovating it. You got to discourage bad behavior. So insurance at the end of the day, Julie, Michelle, Kim, is nothing more than financing bad behavior.
Yep.
With a lot of renovations, some of the things we have to deal with, in fact, I just had to deal with this last week, are these uninvited visitors. I was driving by a property and I happened to see this creature hanging around. And I just happened to be driving by. So I turned back and I drove up to this person and I said, "Hey, what are you doing here?" And they told me, they were waiting for keys. I said, "From who?" And they're like, "Well, we're waiting for the owner." And I said, "I can guarantee you that no one that owns this property is going to give you keys." And this person took an attitude with me. "Well, how do you know that?" I said, "Because I am the owner." And I called the police on that person right then. Well, guess what? That person made it to another one of my properties. And I walked up to it and I was like, "You know this game. Get out or I'm calling the police again." And the advice, go ahead and, hey, Michelle, can you mute some of that noise, please? Go ahead and go to the police station and just do some kind of general trespass. So whenever somebody is there, they know to come and take that person away and arrest them. Have you heard of such a thing? Or
Absolutely. I live in Olympia, Washington. That's right between Portland and Seattle. We have a homeless problem that is intense. And with my office building, we've got cameras up and we put little signs up saying, "Smile, you're on camera." We put tripwires with shotgun primer on the stairs just to scare them off so I can get a good recording. We've got I've had when we run into a homeless person like you have, the first thing we do is we take their picture.
I did. Thank you. I did. Yes.
Yeah, that is so important and that's when you're feeling in any insecure situation. I always tell people, take a picture and tell that person you've just uploaded it to the cloud, and it's date stamped. And that will they will throw a fit in front of you, but they'll walk away. But that's really, really important personal security advice. I'm glad you brought that up. But bottom line, it's about making sure that they know they're on film, that there's signage saying they are on film, and that you don't mind, involving law enforcement. At my personal residence, I have a sign that says, "Okay, you're on my porch, you're on film, hope you don't mind. If you intend to come in the house uninvited, we're well armed, highly trained, and might enjoy a process by which we apprehend you."
So if I ever come visit you, Tracy, I'll make sure I give you like a 30-day advance notice.
Well, I know you, Julie. You're fine.
Okay, so it's those unknown people. Okay.
Yeah, it's definitely unknown people. It's because we had we have a very nice porch overlooking the main drag in Olympia, and people were stealing our furniture. It was really rude. And so we put up a gate. Yeah, homelessness is what it is, and when you're in a town that is accommodating, then you're going to have these issues. And so we just use deterrence. People who know us know they can come on up, knock on the door, and we're good to go. And they're going to hear my Maltese dogs go off, and that won't scare anybody that knows us.
Okay, so risk management, that's a whole other topic in itself.
Yeah.
Well, I haven't seen anybody post in the chats about questions, so I've kind of monopolized the questions. I hope that's okay.
I can't believe.
Are they all still watching, or is it happy hour? I mean,
no, there's some people watching, and what's cool is this. So this is streaming. I'm pretty new to this. Streaming to YouTube. I can't see who's looking or anything there. I see that after. So
Mhm.
see. And then, it's not just now that it could be viewed. So somebody might ask some questions later. Before I forget, can you guys put your information in the chat so that I think everybody who is watching can see it? And then I guess I'll have it because this is recorded and I can easily share it from here. Because, we're going to want people to talk to the experts and learn some good stuff.
I have permission to put my sirelearning.org website in.
Please.
Okay.
Yeah.
Yeah, that's an in-depth study on different parts of insurance designed for not just insurance agents. It is approved in Texas for their continuing education credit, but it's primarily designed for contractors and investors, given what I do for the National Association of Home Builders.
Okay. And do you have your contact, like phone and email? Can people reach out to you that way, Tracy?
That would be through Kim, if you don't mind. I'm one of those guys that creates product, and I can't sell to people directly. That's not what I do. So they'd be happy to do the contact form at the Sire Learning page, and I'd be happy to work with them on education matters. If they want to buy insurance, they need to go through a retail agent. And again, I'm not active as a distributor in the insurance world anymore. I'm an educator.
Okay. So Kim Stallings has put her information there, and
Michelle will do it when she's safely not driving.
You don't want to just text and do it at the same time while you're driving. And
Yeah. Beautiful sunroof, though. Beautiful sunroof.
I know, that is a nice sunroof. I appreciate that. This has been educational for me as well. And one thing I want to emphasize is no matter how much you know, there's room to learn more. There's always somebody that knows more. So this is what sharing this information is all about. I've learned a lot. I hope to be able to share with other people and to always learn. Almost everybody has something that they can help me know more about. So I really appreciate this time. If we don't have anybody that is going to ask a question, I won't. Oh, Kim disappeared. I won't keep people. Put you back in there.
She's back.
Did you remove yourself, Kim? I brought you back.
I tried to put myself in the chat, and then I tried to get back into the video. And I'm good at insurance and gardening and cooking and drinking and a few other things that start with F. I'm not good with technology.
Finance and
Finance.
flamenco and
fighting and F things. Not tech.
Not tech. So
No.
I really appreciate y'all coming in and participating on my program. This has been awesome. This is my first ever, what I'm calling my Wednesday Investor Corner. I'm not even sure I'm going to do this every Wednesday. I think I'll do it when I have something I think is really important to share. So don't look for it every Wednesday, but I do have my Thursday talks on Pitranomics every Thursday at 6 p.m. Central Time, unless I'm out of the country. And then I might even try to do it then. This has been great. I really appreciate it. Just for those who are watching for the first time, this is a part of my strategies, protect, grow, protect, and transfer wealth that I call Pitranomics. There are 10 strategies that can be just cyclically gone through to help you accomplish your goals. And every Thursday at 6 p.m., I cover that. I do want to cover more about real estate investing because that is the biggest part of what I do to grow wealth. My husband takes care of the other part. He's there kind of like hanging out in the kitchen. Once again, I appreciate you guys, those that are on the stage, those that have listened. I hope you have a fantastic day. I'll see you next time. So I'm going to end this broadcast. Thank you, guys.
Bye, guys.